Hello everyone, this is Juan Sarmiento and today is Friday, August the 12th. I have 4 potential candidates for you, so let's get started with that and then we'll examine our current positions, all right? Just quickly go to the account statement, and so far this year I'm up $12,563 dollars, well, 557, whatever. It keeps changing obviously. And okay, so that's pretty good, but let's take a look at my candidates. All right, so let's start with a list here. I have included Disney, CHTR, T-Mobile, and Texas Instruments. So let's go to Disney first, and this is the trade that I'm proposing, and obviously I created it here in my trade tab, analyze tab rather. Let's enter Disney, and here it is. All right, so we are going to analyze this, the volatility and so on, but first let's look at the chart so that we see that the stock has jumped in a pretty good move. The volatility has dropped, now it's near the low, and we see that it jumped after earnings, and the earnings were quite good. Okay, so we're going to take some of those data into our chart here. I'm planning to enter several of these trades. You can see that my trade is here, the cost is $23.60. You can see it also in the Analyze tab, $23.70 is changed already. And all I have to do is multiply so that my total cost does not exceed 10% of my account, which will be $10,400. Okay, so I come over here and I multiply 23.6 times 100 times, let's say, 4. Okay, that fits. That's 9,000, so it's less than 10,000. And what if I did 5? Would that exceed? Yes, that would exceed my maximum here, because we are looking to invest 10,400. Okay, that exceeds by more than $1,000, so let's keep it at 4. All right, you may enter the data here if you wish. So I have said that we are doing times 4, that means 4 straddles short and 8 straddles long. Okay, that's 4 and 8. You can enter the date if you want. The date of expiration of the shorts would be September the 16th, so 9/16/2022. Okay, and the back month will be November 22nd, November 18th rather. So that will be 11/18. There you go. That's so if you want to. The strike price will be 120. This is a good idea to enter this so you have a clear picture of what is it that you were trying to do. Then we enter the earnings expected and actual, and you can see that in the chart. Okay, this is one of the things that the chart will give you. If you enter that indicator here, and you can see that it says 0.937 versus 1.09. So I'm going to show you that again. 0.937 is the estimate, and the actual was 1.09. So it's an earnings beat. Now we're going to calculate for how much, and okay, the expected was 0.937 and the actual was 1.09, and that's a 16% beat. And then we get this trade. I can enter here my green let's see, sell, fill it up with a green here instead of, yeah, that will do it. Okay, so that is a plus. Okay, that trade could be done. And now we're going to look at the volatility skew. adjust this a little bit so I can go to the Analyze tab and see my trade here. And how do we analyze that? We take the back month and front month, we enter the volatility skew. You see it here at the lower right corner of your screen. That's the volatility for each of the legs of your trade. Okay, so we're going to say 34.2, 30.33, 29.41, 48, and 27.22, and that gives me 3.9. It says do not trade. Okay, so I'm going to fill it up with an orange. Why? Because it's more than 3 points. Okay, so that means the volatility is not in my favor. Okay, then we say liquidity. Liquidity is the difference between the mid and the natural. Okay, so that's my particular trade. Okay, mid 23.6, natural 24.05, and that's a company such as Disney is highly traded. It's a blue chip, so yeah, it gives me the green. Then the current IV percentile, we're gonna get that from the trade tab. Scroll down to where it says today's options statistics, and it says 17%. Okay, great, because 15 is my minimum, or sort of like my range. Okay, in this case it says do not trade because it's a little over 15, but considering that the volatility has been declining, I think that's pretty good. All right, and now we have 2 out of 3, and here in this case I'm motivated because the earnings beat was really good and it's a liquid stock. Okay, and then all I have to do is generate the trade. Okay, so in this case we have 2 out of 4. Yeah, it's not the best, but it's acceptable in my way of thinking. You can see if altering these parameters, let's say if we go to September 23, well, that's a little better. Okay, so that improves a little bit my numbers here. And we can change that. Front month 30.34, 27.52, and that's a little better. Okay, in terms of volatility skew, it's a little better. It's borderline, so I can accept that better. Okay, now you can create, I've shown this multiple times in all other videos, that you can create this trade. Create, like right now you can say once the trade is created here, create duplicate order, and then you click here, and then you save the custom, name it what you will. We could call it Genie, for example, and that is saved, and then you can use it in the future. If you don't know how I got there, well, all you have to do is create a short straddle here at whatever price you want, strike price, and we're going to have 120 is the closest here, and then you say analyze sell straddle, and that creates the short portion. Now we're going to go to November. Same, it needs to be the same strike price, 120. Press the control key, it's important, and then say analyze by straddle, and look at that, it created a one. This is a double diagonal, but we are going to have to put 2 long straddles. Okay, so analyze by trade straddle, pressing the control key would add it, and there's your trade generated exactly as I had it. And then all you have to do then say create duplicate, and then save it here by clicking on this icon at the bottom right corner of your screen, and then give it a name, and then you can use it in the future to generate your trades. Easy. Okay. Now, I said that I'm going to do how many? We said we're going to do 4 straddles, 4 tranches, 4 trades really in one, 4 different genies sent as one. So I'm going to say create, confirm and send. Okay, now we're going to say multiple, and then you use your account, you locate your account, and then you see quantity 1. Well, we're going to do 1, 2, 3, 4, and that's $9,000, and then that's ready to send. Okay, then we wait until the end of the day. It doesn't matter, you put your trade, you adjust a little bit as you go along. Okay, let's do the next is CHTR, and we're going to do essentially the same thing. Copy the trade here and take it to, and put it here, paste, and look at the price. It's 91.4. So guess what? That's only one. We're going to do only one trade. 91.35. That's one trade, not 4. Okay, so just one trade generates a trade that is $9,135. We can't really do 2 of them because it would be 18. That's too much. All right, more than 10% of our account, we don't do that. So let's examine here first the earnings. The earnings occurred back here, and what do we see is the estimate was 6.9 and the actual was 8.8. Yeah, that's indubitably exceeded expectations. So we're gonna put it here just for the record, 6.9, 8.8, and I could go back later in the future if I want to analyze that, and that's at 27.5% exceeding expectations. That's fantastic. That's a good trade. Okay, so let's look at the volatility. Has dropped significantly, but let's go to the volatility skew of our trade here at the bottom right corner, and let's go over here and enter our numbers here. I'm copying from here. The top 2 is the back month, and the bottom 2 are the front month. So I'm going to enter 33.74. Incidentally, I only trade those that are less than 40% volatility in most legs, or in all legs really. At least the back month. Okay, so that's less than 3%. Okay, what this does is calculate an average for the back month, an average for the front month, calculates the difference, and then that difference must be less than 3%. Fantastic, that works. Let's go to liquidity. How do we do liquidity? We should create duplicate order, and here is mid and natural, and that tells us how easy it is to get in and out of the trade, because if it is, if it is too big, the difference between mid and natural, it's going to be hard to get in and get out of the trade, and we don't want that. So 90.85, 94.1, and that is 3.5%. It's a little wide, and the recommendation is do not trade on that end because it's going to be hard to get in and get out. And then you can tell, yeah, that's not a common trade, not a common stock that you would do. Okay, and then let's look at the current IV percentile, and if that doesn't work, that's 27%. And again, look at the chart. We are right here. That means the volatility could go further down, and that is working against us. Okay, so 27%, that's too much, 27, and that's a do not trade. So in this case, I'm going to pass. Okay, I just don't think it's liquid enough, and that's going to be problematic. Okay, it's going to be hard to get in, get out, and it's going to give me some surprises that I don't care to do. So I'm eliminating this one. We can revisit it next week and see if we get any different data. Let's go to TMUS. T-Mobile, and that's easy here, TMUS. And go to the Analyze tab, and here we have our trade, T-Mobile. Okay, let's open that. And here we have November 18th. Here is 98 versus September 16th, which is 35 days from now. Good. Okay, so let's copy that. Copy the trade, take it to the spreadsheet, paste it there. And my price is 23.65. 23.65 times 4, and that's again 9,400, close enough to 10,400, and that's 1,000 less. So adding one more won't help us. All right, so that looks good. You can adjust all the states. I'm going to avoid that in the interest of time, but you can make a good record of it by entering all the data here, so that is clear. All right. Meaning the contracts 4 and 8, yes. The expiration November and September 16th. Let's do it, just do it. And the back month is November the 18th. And then you can keep that for future reference, and the strike price is 145 for both. All right, let's do the rest. First, starting with the earnings, let's go to the chart here, and the chart says, oops, negative. Okay, I put my indicator there. That's a negative. Okay, so begs the question, how come it's negative? Minus 0.09 if the stock went up after that. You would have to look at the news, and the earnings may have come better in another sense if they raise price target. Oh, okay, so there is a good reaction from the investment community, the analysts and so on, but it must have been that they raised expectations, and you'd have to look at that. That there may have been some indicator here boosts the 2022 outlook. That is usually very, very good indication that the stock could go strongly higher, and that's what we want. Okay, even if the stock goes down with the rest of the market over some terrifying news, if it goes up, this is the kind of stock I want to be in. It's very, very strong and getting stronger. It's making new highs. So yeah, that's good, even though the consensus, the earnings didn't come better than expected. But usually what happens like that is they have left bad news behind, and you could read all about it if you want to understand why they had losses and what are they expecting going forward. Okay, so it says 9 cents loss versus 78 cents a year ago. So that was bad, yet the stock goes up. Why? Because they increased the outlook, so the company is recovering. Okay, so that's why, and it's trading at a new high. So I'm going to put here, just for the record, the expected was 0.414, and the actual was minus 0.09, so it's negative. So yeah, that's not good at all. But there is another issue here, which is the so I say here the company beats expectations or may not beat or the revenues and earnings guidance may have been raised, or an important source of revenue revealed, and that is what is happening here. May have been raised, the earnings guidance, and this stock company did that, so that's why even though it's negative, was a good earnings report overall, and that's why the stock went up, and it caused the analysts to raise their guidance themselves. Okay, let's look at the volatility skew, and we might not want this at all. Let's see, 28.28, 24.54. Note that I'm just copying the numbers from the lower and the volatility in the lower right corner. This is not good enough. Okay, it's just the skew is too big. So that's do not trade. Okay, I have 2 strikes against it. I'm not going to go any further. Okay, that's 2 things that I didn't like, and I was trying to justify it. But let's look at the skew. That's probably okay. 23.68 versus 24.2. That's okay. And the volatility overall, this is good. Let's go to the trade tab and see the current ID percentile is 14. The volatility is really low. So otherwise we could trade it, but I just don't like the volatility. You may try and change the expiration, and we have 16 here of September. It could be slightly different, let's say September the 23rd, and see if that improves things. If it doesn't, then forget it. It's not good, because the skew, the volatility of the November options is too high compared to the front month, and changing the date didn't help. I got my Disney filled. All right, good. So I'm not gonna trade T-Mobile after all, and I'm gonna go to Texas Instruments. So let's go to the monitor tab, analyze tab, TXN. My account is this one here. Okay, let's go to the analyze tab. Here is my trade, and this is going to be the same issue. You see the volatility here is 22.54. Let's just copy that because this is a deal killer, I think. So we have 30.44. I'm copying the volatility here, 26.35 and 27.11, and the 22.44 is just too low. The puts are too low, and the skew is not good, not favorable. It needs to be three or less. Okay, not going to work. We can come back to those next week. Okay, it's possible that, but maybe the next week will be other better trades. So I'm going to save this, get out of it, and now we're going to examine our current trades. Okay, let's go Apple, and we go to the Analyze tab and look at the risk profile and erase everything else. What does it look like? Well, it looks like we have a loss of $31.46. Well, that's okay, because as you can see, the deltas are positive. This is a brand new trade, November, September, so yeah, no change there. Let's look at C. C is Citigroup. Okay, nice move, as you can see from the bottom. Volatility has been declining. Let's look at the trade, and I don't know if I have more than one leg to this trade, so I'm going to look at that. Look at the statement from, let's say, two parts to this trade. You can see that. You can say 130 days just to make sure you got them all. And we had the original trade and an adjustment. Okay, and we need both to see if we've been making money on this or not. You can also highlight the trade here and see year to date we have made close to $600, but that may be because of other trades on this account. So I'm gonna say we may have traded Citigroup before this year, and that's why we will have a year P&L for the year. I want to see if this particular trade is making me money. So I analyze trade. That's the first part of it. You can hide the position, and you can check the adjustment, analyze trade, and you can see, yeah, we have been making good money on that. And look at this. Okay, that's great. So I might say, well, we have a delta of 200. Let's take a look at the chart. It looks very nice and all. You can see that it's above the Ichimoku cloud. That's a great indication. It's even above this moving average. That's great. It's really had the momentum on its side. The stochastics came down, but it didn't even make it at the bottom. That means it is in an upward momentum. So yeah, we can keep the 200. It would be equivalent to having 200 shares. But I don't want to erase my profits, so I'm simply going to adjust this. What am I going to do? I'm going to simply sell one of my calls. You see, let's delete that or hide that, hide simulations, and I can simply sell a call here to reduce my deltas, which are 210 right now. You can just sell one call because right now it's here at the bottom of the smiley face. Okay, so you might say, well, we can wait until next week until it's above the smiley face. My indication is here that I look at this thing and I say, well, guess what? It's about to get over this limit, this lower end of the smiley face of my chart. So if it goes above it, great. But because it's not, the deltas are still quite high. So I can just simply sell a call to reduce it. Analyze, create a closing order, sell, and we're going to sell just one or two, depending on how small I want that to be. Analyze trade. Okay, let's show all. You can deselect the simulations and just leave your trade as it is and your short, your sell, and that would reduce my deltas to 141. Okay, from 210 to 145. Okay, that's acceptable to me. If the stock goes down, then volatility would increase. If it lands here in the cone, I will make additional money. If it continues on higher, then I would sell more. For now, I just want to sell one. It's a way to take profits off the table and not be so exposed to the deltas being too high. So let's send that. And so there it is. Now we have 19 calls, short, long, and 10 short. Okay, that's good. Let's go to Costco. And here it is. Okay, it is in the area of the cone here. Let's look at the monitor tab. And yeah, this is a loser by the looks of it. I did have some adjustment. Okay, what I'm going to do here is, let's look at it in this perspective here. Okay, the deltas are very small, so I'm going to leave it like that right now, okay? September the 9th, there is plenty of time for that to, wear off, okay? The front month options do wear off. They lose their value as we get closer to expiration, but we want to leave it in case there is a strong move in either direction. And Costco seems to be going up strongly right now. Well, it's been pulling back. Okay, so whatever happens, volatility would spike if the stock goes. But look at it's going above the Ichimoku cloud. The leading cloud is yellow, so that's bullish. Okay, I'm gonna leave it like that. I want the delta is mildly positive. Let's move on to CSX. And I have taken some profits on this one. Here's the original trade and that's the profit. So let's profit taking move. Let's say analyze trade. Let's hide the current position so we can see what we have done so far. And you can see that the delta is 95. It looks like in the center of the cone here of the smiley face. So yeah, what if it goes to 38 next week? I'm gonna wait for next week. Okay, right now it's good. I have taken some profit, reduced my cost, and we have made $50 since. Okay, let's Disney, and that's the one we just entered. GS, Goldman Sachs. Okay, so I can add those two trades, analyze trade and analyze trade. And we can hide that, hide the position, and this is our current trade, $441. You can see that we have only one short and one outstanding. What I mean by outstanding is you take the long, subtract the short, and that's what you end up is called the outstanding. You have one outstanding call, one outstanding put. The stock is trading at here at this level. So how do I take profits? My strike price is $3.25 and this stock is trading at $3.50. And here's my trade at 27. There's not much delta there. And the stock is reaching new highs. Okay, so it would be sensible to take some money off the table. So how do I do that? Whatever change you make, you need to make sure that you end up with a delta positive number. Okay, so how do I do this when I only have one? If I were to sell that call, then I lose all the deltas. So you can do analyze rolling, and this is a roll up, which means you're going to sell your October 325 call, just one of them, because it's only one outstanding, and you're going to buy something at a higher strike price close to 350, around 350. And let's put 350, and it needs to be same expiration, and that's going to give me $17.10. That's $1,710. That's cash that I get back into my account, and you can see the delta becomes 7.50. That's not too bad. The only thing is that we're going to end up with 5 legs, but at some point you can exit the trade by getting the call side out and the put side out. First will be the call side, because it would presumably be more valuable if the stock is above the strike price, and the puts will be just lottery ticket. Okay, let's send that off, and that's about it. Okay, now let's go to the monitor tab, and we have had the Disney trade field and the Citi trade field. So this should fill closed shortly, and I'm gonna stand here and wait until that happens. Before the end of the day, this trade must be filled, and if I need to reduce my credit ask, I will do just that, okay, if necessary. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.